President Trump says that the seeds for growth were planted and the numbers show this economy is blooming and then some. The jobs report was promising, and we got a CPI, a consumer price index print that was lower than expected. And we have wages and prosperity for working Americans. In fact, core inflation, which excludes food and energy, is at an almost 5-year low. And just moments ago, the president said, we have liftoff.
Has the economy turned a corner?
Well, I think so. We're at 50,000 and we're at 7,000 with S&P. If you remember, and they can say it any way they want, they said if Trump, by the end of his term, 4 years, would get the number of Dow number to 50,000, it would be a miracle. It would be I got it in 1 year to 50,000. The economy is doing unbelievable. We right now have the hottest country anywhere in the world.
Steve, it was prices are easing, inflation in check, wages are growing, adjusting for inflation for people. This is, the prosperity is spreading.
Well, the key thing is more people are feeling it. Perceptions are key. And one of the things that they're going to have to overcome in the next few months is a lot of lower income people are still struggling, taking on a lot of debt. And that's going to be something that I think can be addressed with another round of tax cuts. So that by fall, everyone feels not only their paychecks getting bigger, but they are staying really ahead of any price increases. Remember, we still have a health care problem, still have a higher education for a lot of people, still a big problem. So the president should say, we've made real progress. Here's where we have to make more progress, acknowledge that not everything is honky-dory, and have a little more nuance on it. And then he has the credibility to win over voters in November, because thankfully for him and the Republicans and us, the Democrats are going out of their way to show they're a party incapable of having real adults in it, starting with New York City. Los Angeles, for crying out loud, the mayor there, pretty bad, has a challenger who's even worse in terms of going left. So, yes, the Democrats are coming to President Trump's rescue.
Steve, how much do you think, though, you know, like, I know not everything, things are never all hunky-dory, right? We live in a fallen world, it's broken, there's always things wrong. But, like, this is a pretty good spot with GDP, with inflation, with unemployment. I mean, how much more does the president really need to apologize for the track record he's got on the economy right now versus just turning around full-throated and saying, guys, this is an opportunity-laden economy. Go out and make your opportunities. And here's why I say that. Because we just came off the Biden years where all they ever told people is you don't have to move out of your apartment if you quit paying rent. You don't have to pay your student loans, right? It was all giveaways. It was all moratoriums. And I think we had a lot of people get used to the idea that you don't have to budget carefully and you don't have to watch what you spend because the government's going to bail you out at some point. Maybe right now what Trump should say is the runway's clear, go for it. We're not bailing you out, but we're not putting barriers in your way either. Like, how about a full-throated message like that instead of apologizing for things?
Well, I've never known President Trump, to be apologizing, and he certainly hasn't for what he's done in his first year in office. But I think, though, acknowledging that there are still barriers to overcome gives him credibility, also in terms of giving credibility to his real achievements. For example, immigration. The way it's been handled, unfortunately, has hurt him, even though he closed the borders. I'm glad Tom Homan's now in Minneapolis and elsewhere, a real adult in charge of that. So that hopefully that's not going to become a political issue again, as it hurt us in November in Virginia, New Jersey, elsewhere. So that way, acknowledge that the runway may be clear, but we still have some barriers out there, and we're overcoming them. Look what we've overcome. We can overcome more, but we need your support. We need your help, because the other side wants to raise your taxes. As in New York, for example, Jimmy Fallon put it very well. There's so much uncollected garbage, the rats are taking Ozempic. And so point out their flaws with a bit of humor, and then the Republicans can be in a good position. But otherwise, the Democrats just dominate, which is so exasperating, dominates the narrative, as they say. So, yeah.
Are there any concerns? And I hate to cherry pick the data because I feel like every month in a CPI report, I can find something good and find something bad. But this core CPI data was mainly due to a 1.8% drop in used vehicles. Then you could say underneath the hood, gas prices fell 7.5%, but electricity prices are up 6.3%. So are we confident that this disinflationary trend is intact? Or if you look underneath the hood, there are still some things that are concerning, which means the Federal Reserve is on pause, which means we don't get the rate cuts, which means consumers don't feel the relief that the president has talked about in dropping interest rates. How do you think about some of those data points?
Well, in terms of the specifics like electricity, he should be making a point, President Trump and his team should be making the point. The one reason why electricity prices have gone up is because the old Green New Deal and what happened before it under the name of alternative energy sources has wrecked the grid. And we're paying the price for it today. And here's what we're doing to unclog the grid, build new power sources, go with natural gas, go with nuclear power, and undo the damage they had done before.
Overturn the endangerment finding, right?
Which the president would say is huge. Very, very, very major. And I'm glad at least the New York Post got it right when it headlined, this could mean eventually $2,400 saving on your next automobile, which have gone up in prices. Yeah. And also, too, rents look like they're not going up quite so much. But this gets, too, to something maybe Kevin Warsh can hammer home when he starts to testify, is that the Federal Reserve and others don't make a distinction between prices going up because of government policy, because of disruptions to production, and prices that change because you're lowering the value of the dollar. You should make the point. We're going to make sure we have a trustworthy dollar, which brings down interest rates. But things like if Democrats want to put in a 20% sales tax nationwide, that's something we can't control. So make the distinction. Here's what we can control. Here's what regulation has done in the past. We're tackling regulation, or the president is. And on the money side, we're going to finally get the Fed off this crazy notion that prosperity causes inflation. There's no reason why the Federal Reserve can't let interest rates come down, even though you have a booming economy. Good times don't mean real monetary inflation. Debasing the dollar is real monetary inflation. Nerdy stuff, but absolutely basic for economic growth, sustainable economic growth.
Jerry?
I'm bursting, full to bursting on this, because there are signs of trouble with regular Americans, and particularly people who are just over that middle. So there's new stats out. The average client seeking help from credit counseling agencies across the country makes $70,000 a year. So that ain't low end. And what's more, they have debt levels of $35,000. So, you know, we're seeing signs of trouble with a lot of Americans out there. And Dagan talks about this a lot. I think high credit card rates are part of it. People are paying 23, 24, 25% on those credit cards. That is completely unsustainable. Something needs to be done about that. But I think to jump to everything's wonderful and nothing hurts from the data this week may be a bridge too far.
That's where, again, the president needs to show some nuance on it. Made progress, but here's what the problems are remaining. On credit cards, he gets whacked over the head 10% interest rates, but at least it shows he knows the problem is out there. And if he shows the problems are there and he understands them, then people say, okay, he's going to try to find ways to address them. Here's what I've done. Here's what needs to be done. And that way, he has the credibility going into November. We're on the right path. A lot to be done, but we're doing it.
He is warning in only the way that President Trump can warn these giant banks and credit card companies. He throws out 10%. But there is a level, and it is far below what they're charging at regular Americans today, where they will be just fine. Because they make the argument, how dare you tell us what we have to charge in interest on credit cards? It's going to deprive people of, you're going to deprive people of regular credit cards and send them to payday lenders. You're charging them payday lender rates right now. The spread over prime is near a record. It is It was 15 percentage points a year ago. And there is no reason, given where default rates are right now, that they should be getting away with that. So we can do this the easy way, or we can do it the hard way, because what they have done to America is much worse than what pharmaceutical companies have done. And again, you can't even wipe away your credit card debt in Chapter 7 because Bushy and Biden made sure of that. I don't disagree with that, but something needs to happen, and it's one of the critical reasons that people are upset with the economy. And President Trump is doggone well aware of that. But I just wanted to highlight. We mentioned the endangerment finding, ripping up this regulation that's going to save, just according to the president, what, $1.3 trillion. If you look at the $50 billion that the Detroit automakers lost just because of the EV bubble collapsing, that was foist upon them.
Yes.
They take some of the blame, but that was there were a bunch of moronic ideologues running the nation. And it's not just the loss, and how much of it's borne by federal taxpayers, but it's also just the misallocation of capital that goes on when you have a government trying to pick winners and losers, which it is always craptastic at doing. And you finally have people in the White House who are embracing what is technology that will increase productivity in areas where costs are skyrocketing, like healthcare. I just think the sky's the limit in terms of what this nation can do, in terms of our ingenuity, because of the people running the nation.
Well, and that gets on manufacturing. The big villain there has been regulation. For the last 25 years, we've piled over 1,400 major regulations in manufacturing. So the cost per employee of manufacturing today, average, obviously it fluctuates within the whole sector, is $29,000. The average tax burden on manufacturing per employee is $6,000. Now you go to China. Do you think their regulations cost their manufacturers $29,000 per employee? No, take a couple of zeros off. So that was self-inflicted, and he should make the point. This is what was done. This is what we're doing about it. So he shows that he knows the nuance of it, which he does.
He does.
But let the American public know it.
Yep.
And then they cut you slack. Okay, it's not solved today, but he knows there's a problem, and they're doing something about it.
The Democrats are not only don't care that gasoline prices are down, they actually don't want you driving a gasoline-powered car. That's
And
who
in
they
California, he can have some fun. California was once one of the biggest oil producers in the world. Hey, remove those barriers,
Right.
gasoline would be $2 instead of $4.50.
are. Right.